Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for December 7th, 2009. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. And one of the things that we've been talking about for the last few months was that along these highs around this 110 to 112 area, we were looking for potential topping formations to develop along here. And we more or less are still not ruling that out until we have a legitimate break higher, in which at that point we'll revisit the higher target zones. One of the things we talked about last week was when that Dubai information came out over that long weekend in the U.S. We're suggesting that if the bulls dug in and did not allow there to be any aggressive selling, that the market could turn around, break higher, and push up into the higher target zones. Now, at this stage, if any legitimate breaks here on the upside that actually stick, we are targeting at minimum a move even up to the 115 area, 116, or even a much bigger push that could even go as high as the 120 area on the upside. But the one thing I do want to emphasize is that this week saw 3 legitimate attempts to break out on the upside, and each time the market reversed the breakout, which is indicating the fact that the bulls have little to no follow through on the upside, even on those positive employment numbers that came out on Friday. And so at this juncture, the lack of follow through is concerning. We are going to just focus on this line around this 108 area on the downside. At this stage, that's where during the 9:30 to 4 o'clock sessions, that's where the printed low was. And at this juncture, if the market cannot break above this 110 to 112 area, any technical breakdowns below that 108 line will reopen the window for a push back down to that 103 to 105 area. But at this point, anything that breaks higher, you got to look for at least another $3 to $5 on the upside. Next here, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. And one of the things that we can identify here is that it's been very range bound basically since August for almost 4 or 5 months now. And at this point, we're looking for some sort of a committal move on regional banks here. At this point, we will treat this as a rising wedge formation that will roll back on the downside until proven otherwise. The only time that we will actually start becoming a little bit more positive or bullish on the regional banks is if they manage to actually break above the 21 level on the upside and actually hold it. If we see some good proper consolidation up at those higher levels, that opens the window for a breakout that could even go up to 23, 24 on the upside. But if we continue to reject off of these levels and expecting it to come all the way back down to the 18.5 levels, it could be very well in the cards. Next here, I want to take a look at the ISE Sindex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And at this juncture, we were observing the double top up around that 112 to 114 area, and a subsequent failed rally attempt here that we were subsequently looking for a technical breakdown to actually occur here. And we actually still are playing this scenario out, and I still expect this outcome on the downside. But in the same regards, one of the things that could turn this bullishly is a failed completion of that pattern on the downside. If in fact all the selling that we've seen here is contained to this flagging wedge that we've seen right here, then subsequently the completion of an upside pattern would have us retesting all the way on the upside. So early this week, we're going to just watch whether this actually reverses here. Anything that breaks back down below the 104 level, 102 level on the downside, at that point we'll start playing our downside scenario out again with a minimum retest down into 98, but more than likely even a push that could go as low as the 96 to 94 104 area. But in the same regards, if we suddenly are breaking up to 107, 108 on the upside, then we probably still have another $5 to $6 move on it that if we break above that zone. Next here, I want to take a look at the ISE Home Builders Index, which is the symbol RUF. What we continue to do is see weakness in this market relative to the broader market. We continue to see lower highs being put in and testing of bottom support lines. At this stage, if this market doesn't dig in and hold here at this $9 level, we are looking for that completed move, at least on the initial push down, to go as low as the 830 to 860 area on the downside. But at that stage, if it continues to consolidate even down at those lower levels, then we'll be seeing a push that could all go all the way back down to that 7 to 7.25 area on the downside. The only way that scenario doesn't play out is if the bulls dig in right here, right now at this $9 level and hold the line to create something that's a bottoming formation, like a double bottom or something, and then reverse back above the 10 to 10.25 area. But at this point, we don't want to consider those upside options until we find out that in fact the support levels are holding. Next here, I want to take a look at the ISE Natural Gas Index, which is the symbol FUM. We tightened up the focal point on the downside up to the 94 to 96 zone to reflect the neckline of the head and shoulders formation that could be developing here. Again, in order to actually confirm it's a head and shoulders formation, there must be a break of that neckline. So we're going to be watching early this week whether there's any thrust on the downside that actually legitimately breaks the natural gas index down. If we do have that break, the measured move for the head and shoulders formation is down into the 86 to 90 zone on the downside, support that comes in from the August and September bottoms as well. So we'll watch whether we make that thrust on the downside or not here. Next here, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX, and similar to what we saw in the S&P 500 on that Dubai news, there was a legitimate drop that could have run away, but like last week we were suggesting, if the bulls dug in and held the line down at those lower levels, we would see thrust back onto the upside. At this stage, and with those reversal candles coming in on Friday of last week, we saw a push back up into that 530 to 540 focal point. But just like in the S&P, we had numerous attempts to break higher on the upside, and each time large waves of selling came in to pressure the market back down. At this point, we still can't rule out the possibility of an upside break, which would see us at that point complete a move even up to the 560 on the upside. But in the same regards, if we see any breakdowns below the 520 area on the downside, then a topping formation may be developing in here that reverses the market and thrusts it all the way back down to that 495 to 500 focal point on the downside. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.